Inflation is scary. I'd be lying if I said I wasn't concerned that the Fed won't do enough to get out ahead of it. Heck, I'm not sure they really even can at this point, which I discussed in detail in this video, which I'll link out to for you directly at the end of this one. In Berkshire Hathaway's most recent annual meeting, Warren Buffett explained why this is happening and offered his advice as to the best place to invest when you're worried about inflation. Coming up.
Think for a moment what would happen if the U.S. government said, well, they work it out in private, and they decide that they're going to send Federal Reserve, and I'm not going to blame the Federal Reserve for this. Somebody back in Washington decides they're going to send out $1 million to every household in the United States. And there are 130 million households in the United States or something like that, and they're going to mail you $1 million in cash. And there were a couple of provisions attached to it. One is, if you talked about it in the next 30 days, the money disappeared. So it was like in one of those old TV shows or something, and poof, disappears. And after 30 days, you could spend it. Well, all of a sudden, the household wealth of the United States, Federal Reserve puts out an estimate, is 130 trillion or something like that. So basically, you've doubled the household wealth. And all you've done is mailed out people. But then you don't tell them you're doing it with everybody. You just say they won the lottery or whatever it may be. And now you've got an amount equal to household wealth. On average, people have doubled it. They've got this extra 130 trillion of wealth, and in a month they can spend it. Well, what's going to happen? Well, prices are going to go up, but are they going to go up immediately? Well, you don't know the other guy got it. You just know you've got it. So you don't really feel like you got to rush out and buy things. But as soon as word gets around, well, we've mailed out. If you look at the amount we've distributed, the federal government, I'm just talking about the distribution of resources. We're talking numbers like that, and it affects prices. It has to affect prices. If you had 10 times as much, if you went home and you had 10 times the net worth you had yesterday, but everybody else did the same thing, it doesn't increase the amount of bread in the economy or the number of cars. It just means that the price, the value of this is going to go down, and its purchasing power, you can't buy more than exists. So it's a very strange period where we had lots of money sent out to people. One way or another we're getting it, that they didn't find as many things to buy as before, and we had supply chain disruption. We have all these things happen. But the end of it is they go out to the Nebraska Furniture Mart and they just start buying things. And they do it with our other companies, and they do it in very peculiar ways. And now they're buying, one thing, jewelry stores were, generally speaking, not a very good business. And 2 years ago, every landlord that had a jewelry store or multiple jewelry stores in their mall, was wondering how they were going to get their rent. And now every jewelry store virtually is doing incredibly better than they ever dreamt, with way less inventory, because people are just come in and buy. And they don't wait for sales. When they walk in the store, they're going to walk out and they're going to have bought something, and they pay for it. They got the money.
Shut up and take my money.
We are seeing an unleashing of the fact that we've just mailed a lot of money to people, one way or another. It's very indirect. It all gets complicated when we talk about a big system, but this is what's happened. And I will guarantee you that if we mail out $1 million to every household in the United States tonight, and you don't know that it's happened, you don't really expect much to happen in behavior tomorrow. But somehow, at some point, and then if you start doing it every month, we'll say, and people really know you're doing it, then they start anticipating it and buying ahead of time and forward. I mean, there's a million things that happen in economics. But the answer is, we've had a lot of inflation, and it was almost impossible not to have if you're going to mail out the kind of money we've mailed out.
That was lengthy, but he's right. It was obvious. Yet our Fed somehow claimed they thought it was transitory because they claimed the problem was just supply chain and that would ultimately work itself out. And yet, even with the benefit of hindsight, you almost never see any central bankers talking about this. They never mention the amount of money printing as part of the problem, except when they're speaking off the cuff and, I think, slip up. I'll show you a clip of that in a bit. But first, in his press conference last week after the FOMC meeting, Powell blamed lockdowns, supply chain disruptions, Russia, China, anything and everything, but not the money. Yet he's dealing with monetary policy, never talks about the money. They don't even like to acknowledge it, not even an honorable mention. Pay attention to this. It's a logical fallacy known as the positive thinking fallacy, occasionally used by political actors to manipulate you, to try to manipulate you, to obfuscate reality. The idea is if they don't acknowledge the negative thing as even being a thing, then there's never an opportunity for an honest discussion or healthy debate about it. When Powell gets asked about the real issues, he talks around them. He finds a way to come back to his favorite talking points. Now, I'm not even saying here that they shouldn't have pumped all that additional capital into our money supply. I do not think they should have, but that's not the point of this video. That's not my point here. So even if you disagree with me on that, as Buffett does, my point here still stands. The big issue here is if you don't acknowledge the problem, you can't properly fix it. If there's a pool of water on my bathroom floor and I blame one child who splashed water out of the tub and another for bringing a cup of water in there and spilling, and I make each of them clean up their mess after each incident, I'm not actually dealing with the biggest contributor to that problem if there's also a pipe busted and leaking underneath the sink. And the longer I take to acknowledge and accept that problem, the worse that whole situation is going to get. The more the problem is going to spread. It's going to damage the cabinet, it's going to damage the flooring, and so on. The harder it's going to be to ultimately fix. Think about this. If the main contributor, or one of the main contributors, to the problems we are faced with today was all that money printing, but the powers that be never acknowledge that fact, if they get away with just blaming anything and everything else, but not that big issue, what do you think is going to happen the next time they just want to print more money? Which seems to be more and more often these days. If they're allowed to, Jerome Powell and the Fed won't acknowledge that as part of the problem, so that they, one, don't have to take the blame for it, and two, so that they can use that as a tool just as often in the future. It's a particularly effective tool for kicking the recession can down the road and exacerbating that ultimate recession. In a rare moment of honesty, or perhaps in an off-the-cuff slip-up, the managing director of the International Monetary Fund, Kristalina Georgieva, said this.
I think we are not paying sufficient attention to the law of unintended consequences. We take decisions with an objective in mind and rarely think through what may happen that is not our objective. And then we wrestle with the impact of it. Take any decision that is a massive decision, like the decision that we need to spend to support the economy. At that time, we did recognize that may lead to too much money in circulation, too few goods. but didn't really quite think through the consequence in a way that upfront would have informed better what we do. And we act sometimes like 8 years old playing soccer. Here is the ball, we are all at the ball, and we don't cover the rest of the field. Our ability to deal with more than one crisis at one time is very, very limited. So we have unintended consequences of actions, and we have insufficient attention to cover the whole field.
There you go. She revealed a lot in that break from script, from narrative moment. Now, first off, I want to be clear, honesty like that would be a good step in the right direction here. We're all adults. If you're a kid watching this, cool, good for you. But for the most part, we're all adults. The lies, the partial truths, the dancing around questions, skirting the real issues, the deception, the politics, it's not helping. It's making our problems worse. But think about what she admitted to there for that group. We rarely think through what may happen that is not our objective. That's kind of an important part of economics. It's a problem that many politicians and modern economists fall victim to. They just focus on fixing one problem and don't give any thought to the inevitable consequences of their actions. It's like they think, this tree in front of me is rotten. It might fall over and injure someone. We need to burn it down. That'll solve the problem. Without realizing they're standing in the middle of a dry forest. They can't see the forest for the trees. Today is already the tomorrow which the bad economist yesterday urged us to ignore. Henry Hazlitt, from his brilliant book, Economics in One Lesson. These central bankers really should read that. Our IMF MD goes on to say that they didn't quite think through the consequences in a way that upfront would have informed better what they do. Again, I appreciate the honesty. That's how we can get better. We can all learn from it. But isn't that kind of your job? To keep a cool head and fully think through the massively impactful policy decisions you are all putting into place? I mean, they affect all of us in a big way. That seems kind of important. And I loved her analogy there at the end, about them acting like 8-year-olds on a soccer field. I coach my son's soccer teams, U10 and U7, and yeah, it can be painful to watch. Most of them, except for my boys, are all just crowding around the ball, not thinking about anything else. That's not the best strategy. I mean, couldn't we get some adults in there who are better able to understand the nuance of the game and understand the value of playing the whole field, paying attention to what's going on all around the field? Let's go back to Buffett's comments for a moment. I want to be fair and not twist his words. He does go on to say that he believes all that money printing was necessary, and he lauds J. Powell as a hero. As you probably know, I disagree with that sentiment, and that's okay. Buffett and I disagree sometimes. As I've pointed out in other videos, I believe those actions have only just kicked the can down the road and made our ultimate reckoning, so to speak, more painful. I think the problem is they seem to just be focusing on right now. What's going to keep everyone happy? What's going to make us look the best right now? Not what might this do to us a year from now or 5 years from now, just right now. That's all that seems to matter to them. And I totally get it. It's political, it's optics. If what was best for us in the long term happened to be painful today, a majority of people might not understand that. And then the politically prudent thing to do would be for the president to not give him another term. And then for other experts and politicians to vilify and blame him for all of our problems. So yeah, I get it. He's between a rock and a hard place. And the type of people willing to make those kinds of bold stands where you do something because it's the right thing to do, even if it's extremely unpopular, those kinds of people don't usually make it to the highest echelons of political influence. But also with these guys, it's almost like they're just relying on hope and a prayer that they'll be able to fix things behind the scenes, never outwardly admitting some of the worst real problems. Or worse, they're just praying for a miracle. Like when Powell and Yellen kept stubbornly resisting the idea that inflation was on the horizon due to their decisions. Or as I mentioned earlier, when it did start to manifest and they just obstinately repeated the line about it all being transitory, even though it seemed obvious to many that that was a naive theory at best, more likely just a lie. Were they hoping it would just magically fix itself in the meantime? Surely they saw it coming, they just didn't publicly admit it for one reason or another. And now today, it's the way Powell is so insistent about the strength of the US economy. He'll cite one or two data points to try to prove his point while ignoring the scores of others that suggest otherwise. And then in press conferences, he'll occasionally, logically, get asked, but never really pressed on, if the economy is doing so well as Powell states, why not be more aggressive to attack inflation the way Paul Volcker did back in 1980? This is, of course, one of those questions he'll dance around and not really answer, ultimately circling back to one of his rehearsed talking points. The economy is great, but we're going to delicately approach this inflation problem because... Legendary investor Paul Tudor Jones, famous for predicting and profiting from the 1987 stock market crash, described our overarching economic condition in a CNBC interview. He referenced the Financial Conditions Index and pointed out that the only other times, and there were only about 10 of them since they started tracking it back in 1980, all the other times this index has performed the way it is performing right now, after every one of them, the Federal Reserve cut rates within 24 days on average, sometimes even as quick as 2 or 3 days. Yet here we are today with similar economic circumstances, where in the past they wanted to cut rates, implying the economy is not doing so well. But this time, the Fed can't do what they've done in the past, because this time they have to also deal with runaway inflation. It is objectively a challenging situation, but Powell doesn't need to lie about it. Here's more of what Jones had to say.
Do you look at that poll and say to yourself that a recession is coming? Do you say everything's on sale, I got to buy things? Do you say that I got to short this market? I mean, I know you say you don't have a strident view, but you must be telling your traders to do something.
Clearly you don't want to own bonds and stocks. You start with that. It's going to be a very negative situation for either one of those asset classes, right? You can't think of a worse macro environment than where we are right now for financial assets.
He can't think of a worse environment than where we are right now for financial assets. From an investing legend who's been successfully growing his hedge fund since 1980. What is Powell hiding? Why not just admit that this is going to be a challenge? Because it is. And then he'd have less egg on his face when the economy does, in fact, continue to turn over. And then my concern is that once we do sink further into recession, what excuse are they cooking up for why they no longer need to focus on inflation? For why they can return to stimulative policies like rate cuts and maybe even pumping even more money, this time right back into the money supply? I don't know exactly what their excuse will be to try to mask what they're doing, but they'll have one. And with that, I fear we still have a ways to go with inflation. Now, I've made a video about the best places to invest to profit from inflation. I'll link out directly to that video at the end of this one as well. But what does Buffett say? Well, he was asked several times about the best places to invest during an inflationary environment. Here's what he had to say.
The best thing you can do is to be exceptionally good at something. If you're the best doctor in town, if you're the best lawyer in town, if you're the best whatever it may be, no matter whether people are paying you with $1 zillion or paying it, they're going to give you some of what they produce in exchange for what you deliver. And if you've got it, and if you're the one they pick out to do any particular activity, sing or play baseball or be their lawyer, whatever it may be, whatever abilities you have can't be taken away from you. They can't actually be inflated away from you. Somebody else will give you some of the wheat they produce or the cotton or whatever it may be, and they will trade you for the skill you have. So the best investment by far is anything that develops yourself. And again, not taxed, so that's what I would do.
There you have it. And if that doesn't help you as much as you had hoped, you might want to check out this video on how to profit from inflation and what to avoid. And then also, here's this video I promised on why things are worse now than they were before. I certainly hope these videos help you. I wish you all the best. Take care.